Hello, everyone. Hi, Don.
Hi.
Happy Monday. We're joining you all Monday instead of Friday this week, and we will be back again this Friday. Hopefully, everyone had a great weekend. I think we'll keep today's fairly brief, but wanted to give you our thoughts on the market. As always, um, we've been having a lot of internal conversations, making some moves within our strategies. Don, I guess
A lot
what
of moves.
the top of mind is do you want to convey to our audience today?
So, hi, Lauren. Hope you had a great weekend as well, in addition to everybody else. Oh, I see the ring over my head. I don't know. It looks like a halo. You see that, Lauren? Can you see
Yeah.
it from yours? Um, so, obviously, what makes this week particularly interesting is it begins the start of earnings, sort of full-blown fire hose of earnings over the next couple weeks. We have a lot of key companies that we own that we're very interested in. Obviously, everybody knows how Q2 went, but really we're talking about their outlook and what's happening across their businesses. The bank's earnings last week were kind of the first, major group, JP Morgan, Goldman Sachs, Morgan Stanley, not particularly optimistic tone set by them, but interestingly, the stocks did okay. I thought this was an interesting thing to talk about today. I don't know if this is going to come across, but
I can see it.
this This is earnings estimates for this quarter, then next quarter, then next quarter, and then Q1 of next year.
Like
So
clockwork, back to where
like
we started.
clockwork, right? So what this is clearly telling us is that the market knows terrible quarter in Q2, Q3, Q4, but by Q1, everything's going to be great. So that is interesting because I'm not sure that's consistent with what we see or hear from the companies that we own. However, it's unassailably true that the companies that we own, the price action has been pleasant. As suspicious as we are, we've been long and strong, and we haven't cut bait and run or anything like that. There will come a time to do that. And so I want to just say one thing, and this might not work, but I'm going to try it anyway, which is uh,
Oh, a screen share. Since
this
we're
could
yeah.
be a disaster. Do you see this with the
Yes.
lines?
Yep.
Okay, so I got my first. Why are we messing around with anything but the S&P 500 question?
Mm-hmm.
Why? And I said, well, I'm glad you asked. So I decided to put up the S&P 500 over the last 30 years, in addition to the Russell 2000, which doesn't go back all the way that far, that not the way that we track it, the EFA, which is the purple line, which is Europe, Asia, and the Far East, and the yellow line, which is emerging markets. So I don't want to belabor this point, but I think it's worth making, which is now as then, the major market cap companies are dominating the price performance, right? Apple and Amazon and Google and Facebook. And we hear this all the time. And people say, well, it's not like 99 or it's not like times in the past. Anyhow, we're not here to say that it is or it isn't, but I think it is interesting to note that the price action of the index, just the index. If you look back here and you look at, this is August of 2000, and the price of that index was 426. And this is September of 2002, that's 228. So if you owned that and your $426,000 account went to 228, you can say all you want that you would be okay with that and you're pleased. No one I've ever met as a client would be pleased. But then you fought your way back years later to 435, just a little bit above the 428 that you were at in 2000, only to find out, obviously, financial crisis seems like a million years ago. That's 206. So now, had you have owned this from here to here, big beat down. My point in that is that now if we just swing this to 3 years, These are the price action of those indices over 3 years. So you can see the blue is in a very different condition than the other three. So and this is indexed to 100. In other words, if you'd have put $100 in 3 years ago, how much would your $100 be worth? 95, or call it 96 for rounding, 101, 102, and 131. So all I say about that is that it is at some point in time going to be worthwhile to own something other than the blue line. We maintain concentration in the blue line like everybody else, but we have to be aware, and we are, I would say, uniquely skilled at what do you own besides the blue line, which is obviously some of the answer to what's gone into the strategies over the last weeks and months. So I, for one, and you can are always free to disagree, I think we are improving the positioning. The performance I'm actually thrilled about. Everybody has to make that call for themselves, but I like the portfolio and how it's structured on a forward-looking basis more and more and more and more right now with all the moves we've made, and we've been fairly active. I know you would agree with that. So
Yeah, yeah, I agree.
so yeah, and here we go. For those of you following along, here we are, the 20th. So we've got IBM was kind of the, if we care about them anymore at all, but over the next few days, we've got 12 that we care about tomorrow, and 20 the next day, and 20 the following day. So by Friday, we're going to know a lot more about where we all stand in terms of guidance, boots on the ground, what's really happening in companies. I think our sense is it's probably a little more grim than the current prices are
Right.
reflecting, and we're positioned accordingly. So anyhow, all I was saying is I feel like I think some of the caution we continue to own is a reflection of the fact that we think the narrative could easily change, and it's too late to get defensive when the narrative changes. So you want to own that before that happens. So we're
Yep.
sticking with it. And the other thing I said is we're going to know a lot more on Friday than we do today about where we are, because it's a big week earnings wise.
Yep. So stay tuned.
So yeah, so we'll check in on Friday. And as always, thank you for your efforts, and all of our clients. Thank you guys for the support and for sending in your friends, which we appreciate. It was a super busy quarter for us, and people seem to be responding to what we're doing, and we're deeply appreciative of that. So we will continue to press on.
Great.
Oh, and any parting words?
Nothing for me.
Okay,
Buckle
good.
down and get things done this week.
Exactly. Big week. We will be paying close attention for sure. So we'll talk to you all Friday. Thanks for everything. Talk to you soon. Bye.